AI can help summarize policies, classify transactions, and explain accounting concepts, but convenience does not cancel confidentiality. Accounting data may include payroll, bank details, customer records, tax information, forecasts, or unannounced results. Before placing anything into an AI tool, treat the information as protected and ask 3 questions. What is the data? Who is allowed to see it? Where will it go, and how will it be retained? Start with your organization's approved tool policy. A public chatbot may use prompts differently from an enterprise tool with contractual privacy controls, access management, and retention settings. Never assume that a tool is safe because it is popular. Confirm the approved environment, user permissions, training settings, and vendor terms. If the tool is not approved, stop and escalate. Reduce exposure before prompting. Remove names, account numbers, addresses, invoice images, employee identifiers, and other unnecessary details. Replace them with labels or invented values. Share only the minimum information needed for the task. For example, do not paste an entire payroll report to ask why a formula failed. Provide a fictionalized formula pattern and a few non-sensitive sample values instead. Worked example: a controller wants AI to summarize a monthly expense trend. The original file contains 240 employee names and corporate card numbers. The controller creates a safe sample with department labels, month totals, and category amounts only. The tool identifies that travel expense rose from $18,000 in April to $24,000 in May, a $6,000 increase, or 33.3%. The controller independently checks the calculation against the ledger and documents what data was removed, which tool was used, and who approved the result. Confidentiality also requires controls after the prompt. Store outputs appropriately, restrict sharing, delete temporary files according to policy, and never treat an AI response as an authorized accounting record. A human reviewer must validate accuracy, challenge unexpected results, and escalate suspected exposure or policy violations. The goal is not to avoid AI. It is to use AI with data minimization, approved tools, documented decisions, and accountable human judgment.
AI governance is the system that helps an accounting team use artificial intelligence consistently, safely, and accountably. It is more than choosing a tool. Governance assigns ownership, sets permitted uses, protects information, and preserves evidence of what happened. Start with ownership. A business owner defines the purpose and success criteria. An accounting subject matter owner checks whether outputs fit accounting policy. An information security or privacy owner reviews data exposure. Internal audit or a control owner may test the process independently. Clear roles prevent the assumption that the AI system is responsible for a decision. Next, write a policy that people can actually follow. It should identify approved tools, prohibited data, acceptable use cases, required human review, retention rules, and escalation triggers. For example, a team might permit AI to summarize public guidance, but require approval before using an AI-assisted draft in a financial statement, tax filing, or journal entry. Confidential customer, employee, and transaction data should enter only an approved environment, according to the organization's security requirements. Worked example: a fictional controller allows AI to draft explanations for unusual month-end variances. The policy says the analyst must compare the draft with source reports, correct unsupported claims, record the final explanation, and obtain controller approval. In one case, the system suggests that travel expense rose because of a new sales conference. The ledger shows no conference costs, but a duplicate vendor invoice. The analyst rejects the explanation, documents the discrepancy, escalates it to the controller, and attaches the relevant report references. The AI proposed text. A human validated the facts and made the decision. Finally, build an audit trail. Record the tool and version, date, user, purpose, data category, prompt or workflow reference, output, reviewer, changes, approval, and escalation outcome. Monitor exceptions, model changes, and recurring errors. Periodically test whether controls still work and update the policy when risks or tools change. Good governance does not eliminate judgment. It makes judgment visible, repeatable, and challengeable, so AI can assist the accounting team without silently becoming the accounting team.